Let's talk to Vicky Pryce. She's an international economist and a Global Business Europe regular. Great to have you back on the programme. So what indications are you seeing here that this isn't the end of the story for the markets?
Well, it's not the end of the story anyway in terms of the agreement, because it's only a framework agreement. We're going to get a few more details, and I think by August the 1st. So we'll hear a little bit more about some of the detail, and a lot of the detail is still to be sorted out. And remember, even if we get more of the detail, then it needs to be passed by the various national governments. And what you have already been indicating is that some, particularly France, are not very happy with what has been said so far. And it may take quite some time for it to become a proper agreement. And there is a question as to what happens to trade in the meantime. Does it happen automatically that everything gets reduced, let's say, from 25% to 15%, which has been the case in some sectors, or do we have to wait? I think there are all sorts of things there that need further sorting out. And the markets have reflected it, as well as concern about where it leaves the balance, really.
I mean, if we looked at what's happened during the trading day, energy, defence, infrastructure sectors, they seem to be benefiting from the EU's pledge, being reflected in stock gains. But then you look at automotive, look at chemicals, steel makers. I mean, what's your outlook for those stocks now?
Well, those particular stocks where there is still uncertainty, I mean, if you look at cars, for example, and we've seen, German car companies in particular being negatively hit, there is no doubt that where the balance lies, which I was talking about before, is in favour of the US and actually against the EU. So it used to be the other way around, and it's now moved decidedly the other way. So they are suffering. We still need to get a lot more detail on pharmaceuticals. But you are quite right when you're suggesting that perhaps some other areas are happier, and that is because some of the uncertainty has gone. And although there will be a hit on growth in the EU, it's not going to be as big as before. So those sectors that do depend on growth and on extra spending, such as infrastructure, may find that they are indeed likely to be doing better, because some of that uncertainty, maybe something in relation to interest rates, will also have been clarified a little bit more.
What about what's happening on currency markets? Are they being more circumspect about this framework, perhaps reflecting deeper concerns about Europe's leverage?
Well, yes, I mean, it would be very interesting to look at the euro and see how it's doing. I think it's probably going to reflect the fact that there is a bit more certainty in the short term. But in terms of the way in which growth is going to go, I'm suspecting that perhaps there will be some weakness. For the moment, we've seen a little bit of strength there, certainly in early trading. But then that will perhaps be affected by people sitting down and thinking a little bit more about what the implications are. And a lot of that will depend on what happens to interest rates ahead. And I think that's going to be an interesting one, because there is no doubt that tariffs in the US, even though perhaps they're less than was expected overall, are going to add to inflation there. And we're going to have to wait for crucial data that's going to come out of the US pretty soon to tell us this. And in the EU, we're probably going to have lower inflation. So yes, certainty should help the euro up to a point. But if we're thinking about lower inflation possibly and also lower interest rates, then it should be the other way around. Where it will end up being is a question mark.
So we're looking out for data, but also, as you mentioned, this is a framework. So we're still waiting on some of that detail. And Trump has form, doesn't he, instead of tinkering around the edges of these agreements. What do you think it's going to take to really cement investor confidence?
Well, there are some sectors where there is still huge uncertainty, I'm afraid, such as the pharmaceutical sector. And there is also a bit of a disagreement, depending on who you listen to, whether you listen to Trump, whether you listen to the Commission, about whether pharmaceutical products are exempt, which ones might be exempt, and whether there is still the possibility of considerably higher tariffs there. And also, if there is concern from some countries and there is any delay, I mean, it is entirely possible, given earlier form, that we might have changes happening from the US side as well, less willingness perhaps to compromise in some areas. And also, of course, what's going to happen in other sectors, because obviously there are going to be some give and take. And the EU had already been pressurised in terms of its own online digital tax that it intended to impose, has already, in fact, started imposing, which will affect, of course, US companies, tech companies. So whether there is more compromise there as well, what the EU is going to offer at the end is still up in the air.
Vicky Pryce, thank you very much for your insight.